Imagine this. You have $1,000 to invest in the stock market. You open your brokerage account, scroll through hundreds of stocks, and freeze. Which one should you buy? Which one is safe for a beginner? Most people just guess, and most beginners lose money on their first stock. But it doesn't have to be that way. In this video, I'll show you exactly how to pick your first stock as a beginner without guessing or losing sleep. Let's start simple. Step 1. Understand the company. You're not buying a ticker symbol, you're buying a piece of a business. Ask yourself, what does this company do? Do people need its product or service? Does it have room to grow? For example, look at companies like Apple Inc. 15 years ago, people understood the product, the growth, and the potential. Step 2. Check the financial health. Even as a beginner, you can look at simple numbers. Is revenue growing year after year? Is the company actually making money? And how much debt does it have? Too much debt can be risky. Step 3. Look at the trend, not the day-to-day noise. Ignore the daily price charts and social media hype. A stock may fall 5% in a week. That doesn't mean it's a bad company. Long-term investors focus on growth over years, not swings over hours. Step 4. Start small. You don't need to put your entire savings in one stock. Invest an amount you are comfortable with losing if something unexpected happens. This reduces stress and allows for learning. Step 5. Check the valuation, simple version. Beginners don't need complicated ratios. Just ask, does this stock price seem reasonable for what the company earns? If it's ridiculously high with no clear growth, maybe wait. Step 6. Avoid hype and tips. Never buy just because someone on YouTube or TikTok said this stock will 10x. Investing is about patience, not luck. Do your own research and trust your analysis. Now here's the key thing most beginners miss. Even if you follow these steps, your first stock may not double tomorrow. And that's fine. Investing is a long-term game, not a sprint. The goal is to learn, build confidence, and start your investing journey correctly. Step 7. Track your progress. Note why you bought the stock. Track your returns over months, not days. Reflect on mistakes and wins. This is how disciplined investors grow, by learning from every decision. Step 8. Think about diversification later. Your first stock is a learning experience. Once you feel confident, you can gradually invest in multiple stocks or ETFs to reduce risk. Remember, beginners fail because they guess, follow hype, or rush. If you follow these steps, you're already ahead of 90% of beginners. Quick recap. 1. Understand the company. 2. Check financial health. 3. Ignore daily noise. 4. Start small. 5. Check valuation. 6. Avoid hype. 7. Track your progress. 8. Diversify gradually. Next video, Day 6, we'll cover what are dividends and how to use them as a beginner. If you want to learn how to make money passively with stocks, don't miss it. Subscribe to Dollar Radar and hit the bell so you can follow this series step by step. Remember, your first stock is not about getting rich fast. It's about learning the right way to invest. See you in Day 6.